Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, December 12th, 2024. So the Bulls gave back pretty much, more than half of what they gained yesterday. And as I said, I thought yesterday's gain was kind of silly because the CPI numbers came in line. I don't know why that would really get the Bulls all bowled up. But in any case, so I was expecting a little bit of some backing and filling, and when we got the PPI numbers that came in really hot, we had the gap down. So I know once we opened, we had our momentum indicators from I forgot the name of it. What I used, the delineator. They were extremely bearish. So from the open right here, I actually sold the 60, 90, and 6100. I wrote the calls on it, and it came down. And once we got into this area here, remember this was the support area that I was talking about from last night. Typically, it comes back and where it will go to the bottom of the bar. So I closed this. I closed it for 20 cents and I did pretty good on it, but then I put in the room because I didn't put this out because it was just too fast and I'd like to wait a little bit. But anyway, when we got the bounce, I had said, what you want to do is you want to start building a short position by writing call premiums at the anywhere from the 60.76 up to the 60.82. Made it up to 60.80. I was in the position again. I was waiting for it to come up. Ended up closing those for a profit, and then when we had the other bounce, the cycle momentum and signal weight was extremely bearish, and we are in a sell signal on the 15-minute chart, and I didn't see any bullish divergences. So I told the room, maybe I said you can buy some SPY puts. I did that, and it ended up it was actually a really good day overall. Hang on one second. So we ended up doing. I'm sorry, that's not what I wanted. That's the quantum stocks. Did 35.50 for the day. Brings we're at 157.260. So it was a good day overall. There was really zero stress. But let's try to figure out what's going to go on tomorrow. So if we're just using this ABC model here, you can see that it's coming in right around that 60.45. So I'm going to delete this so we don't get confused on these lines here. So 60.45, and then you can see the 78% retracement from this low to this high. It comes in at 60.43. So this is going to be important. If the bears can push through these levels here at the 60.45 and right here, actually it's up a little bit, 60, there we go, do that. So if they can get through this support right here, then what's going to happen is we're going to do a full retracement all the way down to the 60.29 level. And then from there, this is going to be important. I would expect the Bulls to be waiting here for a bounce. But what's going to happen is we need to wait and see if it does bounce there, what happens when we get up into this resistance levels. And if it holds it down, then we're probably going to be coming down and testing this 60-20 area. And if we take a look at the 60-minute chart, what we want to do now, we're looking at our fib retracements from the top here to this bottom. So this one, I'm just doing it. I just have the fib retracements from this move right here. And this one is the larger one. So you can see we have the 23% at 60.41. So that's just pretty much below it. But it also fits with the 60.43. So again, this is why this area is going to be pretty important. If they lose it, really you have this support right here that's at the 60.28. But more likely we're going to come down to this 60.18 level. And again, it's going to be that's where support is right there. But the thing is, we're, the odds of us, coming down and testing the 5973, I think are increasing, but day by day, every time. Because here you can see we had the big move down, we had a gap up, and then we pretty much went up a little bit more from there, but never took out these highs. So if we take out these lows, we're going to have, for the first time, really probably since here, that we had a lower high and then a lower low. So I would be, if we take out these lows, then I'd be anticipating that we're going to come down to the 6,000 level, possibly test the 5980. I still think that would set up for a year-end rally. So I'm not extremely bearish, but I'm not convinced on the bull side. I just think that they just got a little ahead of themselves. And yes, I'm very bullish with Trump coming into office, but the problem that I was explaining in the premium report today is nobody really knows what he's walking into. I would say 80% of the economic news that they gave us has been fudge numbers, whether it be seasonally adjusted, this and that, and then the next month when that same reading comes out, they always have it high, and then they reduce the previous months. So nobody really knows this, and it's going to be one of those things where I think the street is going to have to digest where we are, even though I believe that what actually I can see happening is the economy doing much better, but the stock market coming down. It's going to be really the exact opposite of what we saw for the past 4 years, where 3 years, because 2021 was a nightmare. But the bounce that we've seen from there to the previous highs, it was the stock market that was doing really good, and it was really just accelerated by 7 stocks, and that was really it. And the thing is that the economy wasn't doing well. So that had a lot of people scratching their head, including myself, where I'm like, how is the market running up this way when, the economy is not doing well? So we may get an exact reversal where the economy actually does well and the market comes down, because right now we're priced at levels that they have not been bull friendly, meaning just valuation wise. And I can hear it on the talking heads, the people that they bring on, where they're starting to get a little concerned with where we are and the valuations. But as I explained, one of my this fellow Steve that I met, a really, really smart guy, made a ton of money on Wall Street. And he had told me about, there's a chart that he follows, and it has to do with stock prices, the combination of all the stock prices, and where the average is compared to where the earnings estimates are. And the thing is, when the earnings estimates are going down as prices going up, and it's only happened 6 times in the last 30 years, and it's been pretty bad for the market. So these are things that you just don't want to assume are going to be ignored, because we're not really, we price this market into perfection, and we're anything but perfection right now. So let's just see what plays out tomorrow. Like I said, these are the support areas. For the resistance, the first line, let me just do this. I'm going to make hang on one second. Bear with me. Okay, so really, the first line in the sand that the bulls are going to have to get through is going to be duplicate, and I'm going to put it right here. So right at the 60.59, not too far from where we are. So if they're going to get above it, they'll gap above it, but then they have 60.69 as resistance. If they get above that, then this is going to be the important. This is the line in the sand for the bears, and if they lose it, then we're coming up and testing these highs, and that's going to be the 60.80 level right there. So right now I want to wait and see tomorrow when the delineator opens up, and are we going to be extremely bullish or bearish, and from there just make the trades, and hopefully they're as easy as they went today, because like I said, there was absolutely zero stress at all. The bounces came up right to exactly where I thought they were going to. They were taking out the lows, so overall very, very easy day. If I would have held those SPY puts, we probably would have had a $5,000 or $6,000 day, but I wasn't really getting greedy, and I didn't feel like sitting in front of my computer the whole time. So with that, have a great night, and I'll talk to you guys in the morning.